Whoa, what a month. Since Trump's April 2nd tariff announcement, the markets tanked fast, down 12% in just a few days, one of the sharpest drops in recent memory. And just like that, everyone turns into a market psychic. This is just a healthy correction. No, this is the big one. A recession is inevitable. Sound familiar? Here's the problem. That's not strategy, that's ego dressed up like analysis. In today's episode of The Big Bo Show, we're cutting through the headlines, the fear, and the fake confidence to talk about what actually builds wealth. Boring consistency, disciplined strategy, and mental toughness. The same traits that made me a great offensive lineman are the same ones that make you a great investor. Because being a lineman, there's no glory, no highlights. Most people don't even know your name. It's just showing up, doing your job over and over again, while everyone else chases the spotlight. Because when pressures hit and emotions run high, wealth isn't built by chance. It's built by choice. So let's dive in and unpack why in investing, boring is beautiful.
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame. You're gonna win over time, you know. It's hard to attain, but you're on your way. You're listening to The Big Bo Show.
Brought to you by Julius Wealth Advisors.
This communication was prepared for educational purposes only and should not be construed as investment advice. All opinions or views reflect the judgment of the authors as of the broadcast date and are subject to change without notice. Julius Wealth Advisors, LLC, is a registered investment advisor. Our disclosure brochure, available at advisorinfo.sec.gov or through contacting us, provides further detail about our business, services, and fees.
All right, let's talk about what just happened. Since Trump's April 2nd tariff announcement, the markets have gone haywire. We saw one of the sharpest drops in recent memory, down 12% in just a few days, nearly 20% year-to-date at one point. And that kind of volatility is a breeding ground for ego-driven decisions. Markets drop, volatility spikes, and like clockwork, everyone becomes a psychic. Everyone's got a hot take. Everyone thinks they know what is coming next. This is just a healthy correction, they say. Nope, this is the big one. A recession is inevitable. The headlines are blaring, social media is screaming, and even of the quote-unquote smartest investors I know, they're jumping ship, ditching long-term strategies, panicking, chasing headlines, looking for shelter. Let's just call this what it is. Emotional investing dressed up like strategy. And if you're not careful, that mindset becomes contagious. It will infect your portfolio. Here's the truth. That's not execution, it's ego. That's not analysis, it's emotion. And investing, that's how you lose the game. Charlie Munger said it best. A lot of people with high IQs are terrible investors because they've got terrible temperaments. And man, is that showing up lately. Because here's the deal. You can't out-IQ your emotions. You can only out-discipline them. And that right there is where football shaped my financial mindset. If you followed this show, you know I played offensive line. And being an offensive lineman, it's just boring trench work. No stats, no highlights, no glory. But you know what else doesn't happen without linemen? Touchdowns, wins, and championships. I wasn't chasing the spotlight. I wasn't trying to be the quarterback, even though I could have been. I was focused on what the team needed. And in investing, too many people want to be the quarterback, calling audibles, chasing glory, but real wealth is built by people who think like linemen. They protect the plan, they block out the noise, they execute consistently, quietly building wealth for the team. Here's what it looks like when ego takes over your portfolio. Selling near the bottom to stop the bleeding. Pausing 401k contributions to wait things out. Chasing crypto, gold, and the latest safe trend on Twitter. treating your portfolio like the fantasy football team, checking it every 5 minutes. But would you run your business like that? Would you coach your kids like that? No chance. So why manage your wealth like that? You want long-term financial wins? Think like a lineman. Stay grounded, stick to your assignment, absorb pressure without panic, and most of all, trust the play you called before the game got loud. Because in football, just like investing, you don't win games with ego. You win with execution. And wealth isn't built by chance. It's built by choice, one disciplined block at a time. So here's the deal. If you want to win, not just stay in the game, but advance downfield, you got to lead with logic, not emotion. You got to block with discipline, not drama. Because when ego calls the shots, you're already off script. But what happens when you tune out the noise and actually follow the data? That's where we're going after the break. And in the next segment, we're diving into the numbers. Not the panic, not the hype, just the cold, hard truth history has already shown us. Stick around. This is the Big Bo Show, where boring isn't bad. It's beautiful.
Start building wealth by choice, not chance, with Julius Wealth Advisors. At Julius Wealth Advisors, your progress and your gains are our measure of success. Experience personal attention to every detail. We create strong financial plans, use time-tested investment strategies, and offer personal coaching to navigate life's inevitable turns. At Julius Wealth Advisors, we provide clients with a concierge experience in a boutique environment. Join us and let our experts guide you on a collaborative path to financial freedom with sound money management principles. Develop your tailored wealth playbook and help secure your financial future. Start strong with Julius Wealth Advisors. Visit juliuswealthadvisors.com or call 201-408-4644. Email info@juliuswealthadvisors.com. Julius Wealth Advisors, where building wealth is by choice, not chance.
All right, welcome back to the Big Bo Show. Before the break, we talked about ego, how it hijacks discipline, how it infects portfolios, and how it turns investors into speculators, and long-term strategies into short-term fear plays. Now, let's talk about what happens when you bench the ego and start following evidence. This isn't about doing nothing. It's about doing the right things consistently, deliberately, and especially when your gut is screaming to do the opposite. Because here's the play. Building wealth isn't about reacting. It's about preparing. It's about executing fundamentals when the market feels anything but fundamental. At Julius Wealth Advisors, we don't just manage money. We coach behavior. We help you call better plays. We help you stop throwing Hail Marys when a simple handoff would have moved the chains. Let's talk about facts, not feelings, not fear, not whatever's trending on CNBC. Because while panic makes for great headlines, the market, it tells a very different story. So let's walk through the data. Let's think about examples from the past. In 2008 through 2009, people thought the system was broken. This was the great financial crisis. The S&P 500 lost more than 50%. Since then, it's up over 500%. Then we had 2013. Obama's tax hikes were supposed to kill investing. Everyone was complaining about tax hikes. Instead, the market posted double-digit gains. 2016, when Trump won his first presidency, people feared that his win would crash the market. But the rally was swift and strong. 2018, trade war headlines sparked panic, kind of like what we're seeing today. Markets dropped, but by 2019, only 1 year later, we were hitting all-time highs. And then we had 2020, COVID. The market collapsed, down 28% in a month. 1 year later, new record highs. 2023 and 2024, rising interest rates, recession fears, AI hype whiplashing sentiment, and yet disciplined investors kept winning. And here's a stat that may blow your mind. Since 1929, we've had 16 bear markets. That's when a market goes down 20% or more. And in 9 of them, they fully recovered within 1 year. That's more than half. Every downturn feels like the worst one when you're living through it. But when you zoom out, the market doesn't tell stories. It reveals patterns. And those patterns reward long-term thinking, smart asset allocation, staying invested through the noise. You know what it punishes? Panic selling, trend chasing, and playing defense during offensive-heavy cycles. Now, let's bring it back to the field. You already know the Lineman mindset builds wealth, but let's dig into the roles. Let's have a little fun here. Your asset allocation, that's your offensive line as a whole. Each player has a job. Your emergency fund, the cash that you're sitting on, in case of an emergency, in case of short-term noise, that's your center, snapping the ball steady and reliably. Diversification, something that people laugh at during the good times, that's your tackles because it protects your blind spots. And rebalancing, trimming things that may look overvalued and then buying things that have gone down, that's your pulling guards, adjusting mid-play to open up new opportunities. And just like football, it's not about timing the snap count perfectly. It's about running the plays that work over and over again, no matter what the defense shows. At Julius Wealth Advisors, we coach this on repeat. The market doesn't reward ego. It rewards discipline. It doesn't care about your gut. It doesn't care about your Twitter feed. It doesn't care about your clever market timing guess. It cares about one thing. Can you stick to the game plan when it feels uncomfortable to do so? So next time the market dips and the media loses its mind, ask yourself, is this noise or is this data? Am I reacting out of fear or responding with strategy? Am I chasing headlines or blocking for the long game? Because just like football, you don't win games in the first quarter. You win them by executing in all 4 quarters, even when the crowd gets loud. And that's how wealth is built, one disciplined play at a time. Now, after the break, we're going to switch gears for a moment and dive into another one of my favorite topics. Not football, not finance, food. Because in the next segment of the Big Bo Show, Bo Knows is coming in hot with a lesson in how your breakfast order might just be the best investing advice you'll hear all week. Stick around. We'll be right back.
Get your money right. Bonus. If you got the appetite. Bonus. Get your money right. If you want to get another insight. When big was setting the score, but there's something there I want to tell you. Bonus. Bonus.
All right, so we've talked discipline, we've talked data, we've talked about blocking out the noise and sticking to the game plan. Now let's bring it home with another one of my favorite subjects, food. Because investing in breakfast, yeah, they've got more in common than you might think. Picture this. You walk into your favorite local diner. You're hungry. You want something that's going to stick with you. And the server gives you 2 options. Option 1, a classic stack of pancakes, fluffy, dependable, and satisfying. The kind of breakfast that fuels your morning, no crash, no surprises, just results. Option 2, a flaming TikTok famous cotton candy croissant, served on a smoke plate with neon glaze and a side of, look at me! Sure, the croissant's made for Instagram. It'll get you likes, it'll get you attention. But come 10:30 a.m., you're hungry again and wondering, what were you thinking? So which one actually gets you through the day? Exactly. Those pancakes. And that's exactly how investing works. People chase the flame. They want the sizzle. They want the story. They want the spotlight. But real wealth, it's built like that stack of pancakes. Boring, consistent, and filling. Like pancakes done right again and again. And here's what's funny. You jump on your favorite diner's $20 pancake breakfast if they offered it to you for $16 tomorrow. You wouldn't ask, what's wrong with those pancakes? But when a stock drops from $20 to $16, the same 20% discount, people panic. They sell. They assume something must be wrong. The same math, but very different mindset. Why? Because we've been conditioned to treat discounts in the food store, the grocery aisle, the retail store as deals, and discounts in the market as danger. But Bo knows better. Discounts on stocks, often an opportunity. Discounts on logic, now that's a liability. At Julius Wealth Advisors, we coach our clients to reframe that fear into focus, to zoom out, to stick to the fundamentals, and to build wealth like an offensive lineman, not a wide receiver chasing every deep ball. Because boring doesn't go viral, but boring, it builds wealth. Market downturns don't predict your future. They reveal your foundation. So if you're done reacting and ready to start investing like a strategist, not a spectator, here's what that takes. A game plan you can trust, systems that keep your emotions in check, and a team that puts consistency ahead of chaos. At Julius Wealth Advisors, that's exactly what we're here to help you build. Call us at 201-408-4644, email us at info@juliuswealth.com, or visit us at www.juliuswealthadvisors.com. And remember, building wealth is by choice, not chance. Catch you next time on The Big Bo Show, where we tackle money the way it should be, with integrity, knowledge, and passion. And we remind you to do the same in your life. Until next time, all the best.
Thank you for tuning in to The Big Bo Show.
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame. You're gonna win over time, you know. It's hard to attain, but you're on your way. You're listening to The Big Bo Show.
Brought to you by Julius Wealth Advisors.